Hi guys, in this video I'm going to be showing you all about Heikin Ashi candles and how you can use them in your trading, the advantages, the disadvantages, what you should use, what you shouldn't use. So, of course, everyone has seen Heikin Ashi candles, and the first question people ask is, should I use Heikin Ashi candles in my trading? Should I use standard Japanese candles in my trading? Why should I use Heikin Ashi? Why is this guy using Heikin Ashi? So I'm going to clarify that, and I'm going to show you, if you are using Heikin Ashi, how you can get the most out of them in your trading. So I'm going to briefly cover what a Heikin Ashi candle is. You can see here I've pasted the information of how a Heikin Ashi candle is calculated. So we have the open of the candle, which is always halfway or the midpoint of the previous. This candle opens here, which is the midpoint of this candle, and so on and so forth. The close of the candle is the average price of that current bar. So it's basically the high, the low, the open, the close, and you take the average of that. So you divide it by 4. And then the high of the candle is just the normal high. The low of the candle is the normal lows from the given data. So very easy to calculate. Now the advantages of Heikin Ashi come from this calculation. The fact that it's an average, so it's smooth data. You can see Heikin Ashi are very smooth. When you have green candles, it's in an uptrend. When you have red, it's in a downtrend. And that is one of the most classic ways people like to use it. So let's look at some of the candles. When you get these big green candles with no lower wick, that indicates a really strong uptrend and you want to leave your profits running. So if you're in a long position and you see candles like this, you should be celebrating because the trend is likely to continue. And of course, the same applies for a downtrend. We see these big red candles, no upper wicks. So if you're in a short position, you're celebrating again because it's a very strong downtrend. When you get candles like this candle with a long upper wick and a lower wick, or like this candle, long upper wick and long lower wick, that indicates the market or the trend might be changing direction. So you may want to enter the opposite position or consider exiting a position. Or for example here, you get another one at the bottom. And then these small candles like this indicate indecision in the market. So we might go up, we might go down, so you may want to stay out of the market. So people like Heikin Ashi because it's smooth. It smooths out your data. There's less noise. You can look at this chart and it's immediately more attractive than a standard chart. So people like to use it with moving averages because it makes the entire trading process smoother. But of course, when you smooth something, it comes at the expense of lag. For example, if you have a 10 moving average, it may be a little susceptible to noise. It may change directions a lot. But if you use a smoother moving average, let's say a 100 moving average, it's very smooth. New data doesn't affect it a lot. So because it's a high moving average, it lags more. So you introduce lag into your trading and more delay at the cost of a smoother experience. So now that I've shown you how you can use and analyze a Heikin Ashi candle, I'm going to show you one of the more popular things that people do. Now, people like to use signals or trend following methodologies on Heikin Ashi. Now, a trend following methodology in its nature, like confirmation signals or moving averages, lag. But the fact you're applying a lagging indicator on top of lagging data or smooth data basically makes that even worse. It compounds that lag. So people do like to show and use signals on Heikin Ashi candles because they look prettier. In fact, TradingView bans this. It does not allow vendors to show signals on Heikin Ashi candles for this reason, because Heikin Ashi candles are not the real price. So I'm about to show you signals on a Heikin Ashi chart. Keep in mind, Heikin Ashi charts are not the real prices. As I showed here, the close price and the candles are not the real prices. They're smooth. So we load up signals and they look beautiful. So we get a buy signal here, we get a sell signal here. So this sell may look beautiful, but of course it's important to remember, hey, this is not the real price we're looking at. We're looking at a smooth price. So it has that advantage of smoothing out your data and really creating that easy trading feel. But you lose some of the granularity of the data because it gets smooth. So hopefully this video has covered why and how you'd want to use Heikin Ashi candles in your trading and why you want to maybe be cautious of them or why you may want to use them over regular Japanese candles. They provide a smoother experience, nicer trend following at the cost and expense of lag.